Hello guys, hope you guys are good. So I'm here to introduce to you the money machine. The money machine. So this is the Asian session model. So this is why you trade. I'm gonna be showing you how to trade the Asian session and how to consistently make profit trading the Asian session. This is one of the easiest models that you'll ever find on this course, okay? It's an ABC kind of thing. You just follow, it's a simple step-by-step approach, basically. You don't really need to know a lot in terms of price action, but yes, on some days, maybe 1 out of 5 days a week, it's gonna, require a little bit of, an in-depth knowledge in terms of how the algorithm books. So I have about 5 examples, and one of those examples obviously is gonna show you exactly what I'm talking about, where it requires you to have like an in-depth knowledge of how the algo books and how to tell if it's the buy program is in, and you just need to find a continuation setup, or if it's like SL program is in already, and then you're just looking to get like a continuation to a draw on liquidity. So you have a few things to focus on. First thing being the new day opening gap. So you annotate your new day opening gap. This is the first thing you do when you get to it. So you just go straight to your chart, 1 minute. 1 minute chart, you don't need like a 15 hourly chart. You just need a 1 minute chart. Okay, go to your 1 minute chart. You annotate the opening price at 6 o'clock. So if the candle is down close like this candle here, it opened up here and then it closed right there. It made the low, closed right there. So you get the opening price. That's your new day opening gap high. Okay, new day opening gap high. And the date here, sorry about that because I'm using in fact, let me just change that. The date here was what, September 23rd. So we're using the September 24, 2024. You use the following day because this day is already, you're going to be trading as soon after midnight. You're going to be trading the Asian session, which will be what, after midnight it will be the 24th, right? Obviously you are using New York local time. That's very important. Okay, everything here is, when I'm referring to time, I'm using New York local time. So what you do is you annotate your new day opening gap. So this is a new day opening gap high. This is your new day opening gap low. Previous day's closing price at 458. Okay, the closing price here, obviously it's a down close candle, so you get the, not the low, but the closing price is that, the body okay, of that. So, and then after that, this new day opening gap is your initial draw. Okay, so after that you want to annotate your, you put a vertical line at 7 o'clock, and then you want to get from 6 o'clock. From 6 o'clock, you get your highest high, that's your initial buy side liquidity, and then you get the lowest low between 6 and 7. Okay, that's your initial sell side liquidity, and then from 7 to 9 p.m. That's when you're going to be searching and looking for a setup. Okay, so what you're going to be waiting for, you need to have all these vertical lines, 1, 2, and 3. Okay, and then you have the new day opening gap. And also if it's a big like this, you need to have like a CE. Obviously it's a new day opening gap, CE, right there. That's when you're going to be taking partials off. Okay, so in this case you just wait for one side of the market to be swept. Here we, at 7 o'clock we opened. Okay, the opening price at 7 is that. You can extend that out as well and have it as your true session open. This is when your trade, you'll start placing trades after 7. Okay, that's very important. It's a simple step. And then here we sweep sell-side liquidity. Going down, you create a fair value gap. But look at that candle that comes after. It closes above this fair value gap, we are now treating it as what? As an inversion. That's where your buy is. That's what you buy right there. Stop loss below the CE here, the candle CE. Or you can use the body. You can use the body of that candle, or you can use the low of this here, anywhere there. Okay, if you're very much aggressive, you can use the low of the second candle that creates the fair value gap to the upside. But now we are using this as an inversion fair value gap, and this is your target. You can take a partial at the CE, and then but this is your best case terminus, which is the initial buy side. So the new day opening gap high is an initial buy side liquidity in this case, because the highest high is actually the opening at 6 o'clock. So that's your target right there. So this is the trade. Okay, this is an ATM machine. So every day you go on your chart, you look for this simple setup. You don't care about what happens after that. You're going to be using the new day opening gap as a draw, and if you have relative equal highs above that, you can leave a runner to actually run and take out buy side liquidity as it did right there. So we had relative equal highs there. You can just leave a runner and say, okay, sometimes you'll be having relative equal highs up here, okay, but in this case this high is higher than that, so it's not a draw as much. It has been jagged. We prefer the ones where the high on the right is lower than the one on the left. Okay, so I'm going to be showing, this is the first example here, and your trade occurred when between 7 p.m. to between 7 and 9 p.m. So this is when you're going to be finding this model. It's the same uh, every day. It's almost the same thing. It's actually the same thing. Let's go on and get the next example. So I'm not going to delete the new day opening gap here and this initial buy side. Okay, let's go to our next example. Here comes our next example. Okay, so this is what? This is 7, this is 9, where we look for our setup. Okay, so here we have initial buy side. So if you look from, this is 6 o'clock. Where is initial buy side liquidity? The highest high is that one right there. Initial buy side. Let me have it on my left. Okay, there we go. So we have initial buy side. This is the highest high between 6 and 7. Okay, and this is the lowest low. What happens after taking out that buy side liquidity there? We form a fair value gap. It's a base, and then it's supposed to hold price and push it higher. But what happens after that? We break and close below that fair value gap right there. What do we know about the new day opening gap and initial sell side? It's the initial draw between, during this time, yeah, from 7 to 9. So this is when you're going to be looking for a setup. As soon as we close with displacement below that inversion, on retest, you go short right there. Stop loss above this candle's high right there. And then you target what? You can take a partial here at new day opening gap low. You can also partial something out here, and then the next one will be the new day, initial sell side here. But if you have something on the left, relative equal lows kind of thing like that, you can also you can always leave a runner to target that sell side liquidity right there. And you look at what time did we make it to that sell side? Just a few minutes after 9. Okay, so you're still pretty much in the during the Asian session. Okay, but the volatility, most volatility will be found during this period. So this is when you want to look for your setups. Okay, and this was a nice pyramid entry right there, silver bullet kind of thing. Okay, let's go to our next example. It's just an easy approach. You annotate your new day opening gap. It's gonna act as a draw, and if you're above here, we are giving you something like that. Where is your initial sell side? You can always do that. So let's delete this so that it does not interfere with our analysis going forward. Let's get the next example. This video is not going to be long because you just do the same thing almost every day. You do the same thing. But with my South African brothers, I know this is not like a session we are going to be trading the most, because it's late during this time, or early and too early in the morning. So this is one of the examples I was talking about, where it's going to require you to have like an in-depth knowledge as to how, what price actually, how price books actually how the algo, how to see if a program is being respected. It's you kind of have to find a continuation kind of setup. Okay, so in this case, we had initial sell side. This is the new day opening gap, new day opening gap low, and you get a new day opening gap high, and you have the CE right here. So a lowest low and the highest high before. Between 6 and 7, that's your initial sell side and your initial buy side. Okay, and then at 7, you start scouting for a trade. Okay, so what one would look, we haven't taken out either of the initial buy side or initial sell side in this case. So normally, what you want to do is you want to wait after initial buy side has been swept. Does it give you signs and indication like a bearish market structure shift kind of thing? Or maybe some change in state of delivery, or maybe an inversion fair value gap, like how we've been using it. Like you could have used that and waited for it to drop inside, then you can use that as an inversion targeting the initial sell side liquidity. Plus, they look like relatively close, beautiful stuff, you know. And then also, this is still our draw on liquidity. But look at the opening price here. Look at what happened as soon as we open. I'm just gonna extend it through. So the opening price here at 7, we open and clear sell side, and then we refer to the new day opening gap, what CE, and then what happens after that, we retrace, favorite gap is respected, we drop, and then we respect this favorite gap to create a bullish market structure shift. Now, if you don't want to wait for this setup here to fail, this piece to fail to support price and act as resistance, you can just buy this, because when we go all the way up, we create relative equal highs, and already the buy program is in, and this is a true order block here because it's in line with the true session open. Okay, so you could have bought this, you could buy this and target this high, put your stop loss just below the main threshold here, and if you have something on the right, it's gonna act as, you know, something like to, okay, in this case it was not relative equal. I like it when we have like relative equal highs, but I want to show you what was drawing price there. That high was another draw to the upside. So yes, one could buy, once you are comfortable, you can trade such days. You can trade this buy, and then you can even take a partial out here and then leave a runner be out right there, because you can see the buy program is in and we are respecting the discount arrays here. We rally, and then but first it was the new day opening gap CE. We couldn't close below it, and then we rallied. We respected this discount array rally. So this displacement is confirmation that actually, hey, I'm actually bullish, and a retracement after creating relative equal highs is something you should trust to say the draw is to the upside. And I'm gonna put something on here, leave a runner to the low on my left, okay, the high on my left. And then if you get signatures in price between this time window to say, hey, we are getting like a bearish market structure shift kind of situation after taking out buy side, you can then get something to take it low. But if you look here, it was continuously pushing higher, higher and higher and higher. So the only bearish market structure shift that we got was right there when price pushed, cleared the relative equal highs here, and then the bearish market structure shift. Actually, that was a low risk sell, but you need to have something that's confirming, like on a hard time frame you can have something that confirms that, okay, now it's ready to go lower. But the clear or the cleanest bearish market structure shift was here when we broke below the low of the high that took buy side here, closed below it right there, but we never gave you like a clear entry, and it was close to 9. So you don't expect this thing to to go all the way down, and you know, but you can, it's still viable even if you get an entry exactly at 9, as long as you're convinced that it's going to start spooling to your drawn liquidity, which is initial sell side. You can take that, but in this case it was not the case. It was not the case. So a retracement back into the fair value gap after 9, I wouldn't trust that. Okay, you just find something during the session, the trading session, the kill zone, or rather the Asian kill zone. Okay, which is what, 7 to 9 p.m. Okay, so let's get our next example. Actually, I wanna look for the silver bullet. You can see the time there. I'm recording this on, this is what, Tuesday, right? This is Tuesday. Today is Wednesday, so you can see down here it's Wednesday. Sorry, this was Wednesday as well, but yeah, today is also Wednesday. In fact, let me leave this. Um, okay. Okay, let's go on to our next example. So this is the example that actually would require you to have like a little bit of in-depth knowledge as to what the algo is looking for. So here you have relative equal lows again, but let's focus here. What does price tell us after 7? Okay, what's happening here? So here we create an initial buy side, not sell side. This is an initial buy side liquidity. And then where is our initial sell side? So here is our 6. This is our 6 o'clock. So the new day opening gap low is actually the initial sell side liquidity in this case, okay? And then what happens after, you can see that the we are in a bearish market structure shift. You are respecting the premium arrays. You have this Beverly gap right there reclaimed. As soon as you opened at 7, what happened? Okay, I don't know what's happening with my network. So my drawings are not reflecting, but as soon as you open at 7, what do? We rally, I mean we melt, and then we retrace, clear buy side liquidity. There is a bearish market structure shift there. If you don't trust that one, but you can clearly see that the new day opening gap is to the downside. And what's happening above price? We just cleared a buy side liquidity right there, bearish market structure shift. And then what happens? And then there's another bearish market structure shift there with displacement to the downside, fair value gap. I can trust that, put my stop loss above here, target the new day opening gap high, then next partial out at the CE. Then I would take like maybe 80% off here. If I have something like relatively close to my left, I can always consider that as well. But in this case, we did not wait for initial buy side to be swept, because you could see the buy program was already, I mean, the sell program was already in. And if you look to the upside, price is already balanced. There's an institutional order flow entry through inside that fair value gap. Here we cleared the high, melted the two consecutive up close candles, bearish market structure shift, fair value gap, and then again retracement, swept bearish. It was just a bearish, clear bearish sentiment here, and the draw is to the downside. You have initial sell side and also the new day opening gap. Below that we have what? Relative equal lows, and boom, delivered. Okay, so this is just an easy play. Okay, as soon as you open, you just need to read what's happening. If we are trading close to initial buy side, wait for it to be purged. Okay, if we purge it, fair value gap, wait for it to be turned inversion, then you go short. Okay, target anything that's towards the new day opening gap. So it could be clearing out initial sell side here, bullish market structure shift, target the new day opening gap, leave a term a runner to go all the way up to initial buy side. But if you're trading close to initial buy side at the opening at 7, we clear it out, bearish market structure shift. That's the beautiful one. That's the easiest one. Okay, let's clear this out. Okay, let me leave this new day opening gap for now. Let me just take out this and that. Okay, now let's go on to let me actually remove all of them because they're going to interfere. There we go. Here comes another one. Okay, so between 6 and 7 you have that highest high right there. Between 6 and 7 you have the highest high, and you have that low. This is initial buy side liquidity, initial sell side. And when we open at 7, what happens? This fair value gap here, we fail to invert it. Okay, we failed to invert that fair value gap right there. It's respected, and then we punch higher. We clear this initial buy side, right? Push higher, and then after that, we create a beautiful BC to the upside, and then what happens after that? We get a close below the CE, and then we further close below the low of the inversion fair value gap. What's the time right there? It's exactly just a few minutes before 9, but we've now inverted this fair value gap. So this is one of my favorites, okay? And then what happens? You have a lower quadrant right there. We have displacement, and then we trace to that fair value gap and the lower quadrant resist price, okay? And then we get a close below that bullish up close candle. So that turns into an order block right there. Why? Because it failed to reach so it's respecting the lower quadrant of this. Oh my goodness. And it inverted that fair value gap as I was saying. Sorry about that. So I just got disconnected. I'm gonna link the two videos anyway. Okay, so this is to our draw and liquidity, and this is happening up here. We wait for this fair value gap to be inverted, and then we want to see signatures in price action that confirm that now a sell program is in. So this is one of them. We are disrespecting this fair value gap, closing below it, and we are displacing doing that. We are doing that, with um, showing heaviness in price action. And then what happens? We fail to even trade back to that fair value gap because the lower quadrant is resisting price to do that. And then that's a bullish order block formed right there at 9 o'clock. We saw a sell-off, so I was gonna go short right there. Stop loss above the CE because it looks heavy, and I have initial sell side which was delivered at 22.34. But obviously you take partials as you go. New day opening gap. You also have this range up here, so you have that high to the low. So at discount, you have what? Sell side liquidity resting here, partial, bullish order block, partial, partial at new day opening gap, new day opening gap low. Then you leave the runner to initial sell side. Okay, that's why I would just take my best case 10 minutes. Okay, this is an ATM machine. Okay, this is like it happens every day. You just need to focus for like a few minutes, a few minutes, or just from 6 to 7. Okay, let me leave this one because I'm gonna need it for today. Okay, so this here comes the next example. So in this example, the new day opening gap is very so let's just do this. It requires you like some sort of in-depth knowledge here, but you skip days like this. Okay, as a beginner, your setup will be from 7 to 9. You wait for either initial sell side or initial buy side to be engaged, and then you want a bearish market structure shift. Okay, and then you want to go short, stop loss at the swing high, and then you target any form of liquidity, and you are using the new day opening gap as a draw. So here we are on the 1 minute, and the opening price was that, and the closing price is that candle's low, and the opening price is this candle's low right there. So the new day opening gap here is not so big, but it is still a draw. Between 6 and 7, where is your highest high? Right there. Your lowest low is right there. Okay, and then you start to read what is price doing. Okay, right now we are in a buy program. We're clearing sell side internal liquidity, respecting discount areas, pushing higher. We are reclaiming, coming all the way back down, and then look at how much time is spent there inside that small fair value gap, creating relative equal lows. Now we are inside what? We're inside the kill zone now. We want to get our food, our meal for the day. Okay, this is the opening price. You extend this throughout the session. You are going to be framing your trades around it. So let me give you a little bit of in-depth. Okay, so what happens here is we engage buy side liquidity, and then we get something which is if you look here, the fair value gap, because you want to see disrespect, we failed to close below the new day opening gap here. So I can't trust this retracement and say it's a retracement because the sell program is in. I'm looking at the bodies. The bodies are staying above the new day open, and they're also staying above the CE of this BC, which is, if I'm going to be trusting this as a retracement back inside the fair value gap, I want to see it disrespect this fair value gap. Okay, then I can trust and say, okay, now it's searching for initial sell side. Okay, this was a tricky one because everything was happening just close to the new day opening gap. Okay, and we also have relative equal highs up here. So what I would do, if I wanted to find a setup, I'm looking at the relative equal lows here. Yes, so this would be a beautiful draw, but I wouldn't trust the retracement to this fair value gap because this BC here was respected, so it could still pretty much push higher, then create something new after that. So I wasn't gonna catch this sell here. I wasn't gonna catch this sell. I was just gonna leave it. But once we engage this sell side liquidity here, and this low here is staying intact. So that's a buy program because this has it referred to this discount array in the form of a bullish order block, and then it displaced higher. So this is in fact an intermediate term low with a short term low here, and these are short term lows here. So we cleared them, creating a new short term low, and then we rallied and closed above the true session open. We also created a bullish order block right there. So you can either go long and target this buy side and that, or you can just leave this and don't trade such sessions because it's not clear. You just go to bed, okay? But this required a lot of in-depth, okay? If anything, maybe I was going to be a buyer, okay? As soon as we close above this true session open, target this buy side liquidity because we've cleared sell side here. We have buy side here, we have buy side there. We can trade that. But for you, because you're a newbie and you're looking for initial buy side here, not this kind of buy side, liquidity, you're just going to stay out, okay? And or maybe you take a loss on this day. It's okay. You have 2 trades per session. Okay, 2 trades. If you get it wrong twice, you go to bed. That's what I would do. So let's go back to the next day. It's a money machine, guys. Okay, I think we have something here. We do have something here. Okay, there we go. We do have something here. Okay. The highest high between 6 and 7. This is the lowest low, that's the highest high. This is when the new day opening up is above price. We open at 7. What do? We drop. We take out initial sell side. Okay, the fair value gap was inverted right here. So this is my favorite because the new day is up there, which is our draw, and also initial buy side. Beautiful, beautiful, beautiful. What happens after that? We invert this fair value gap, we displace and close above this order block on retest. That's why you want to go long. Stop loss below the swing low here to be safe. And then you can just leave the thing to run. You can to take partials right there at the new day opening gap low. You take partials. And then the next one will come at the CE. And then the final one will come at initial buy side right there. And then after that it dropped. You don't care about what happens after that. But this is the model. Okay, this is it. This is it. Okay, this is the A plus one. A plus, A plus. Okay. Oh, let me not remove this. Just gonna remove this. But this is what you trade, okay? This is what you trade. This is your model for days. The ATM machine. Let's see if we have another. Oh, that's it. Oof, we just missed a nice sell there. Go to here and look at the new day opening gap. This is now the AM session, okay? I'm now gonna go live on my Discord. So I'll see you guys on that I'll see you guys that side. See you guys that side, but we just missed it right there. Beautiful stuff. Okay, so this is a new model for now comes in the 830 model, which is like one of the easiest as well. But basically what you do is to sum it up, you look at the opening at 830. So what you want to see 830 run all the way up to clear some buy side liquidity, relative equal highs, and then you want to see 930 deliver the opposite. If 830 goes to clear, I mean it clears buy side, some sort of buy side from the morning, then you know at 830 you're going to open like you did here. Where did you open? And refer to an order, maybe a 5 minute fair value gap. So it's going to be the continuation and deliver price to the downside. Let's go to 5 minutes and see. So this is the 830 model. You have relative equal highs here. What did we do at 830? We opened and ran the highs. Then we created what? An inversion fair value gap here. Look at the lower quadrant at the new day opening gap created. Now we have a new fair value gap on 5 minutes. If we trade up to this, we still have something to target below price. And it can just be a continuation sell from there. So we have this sell side here. So if we retrace and go all the way up, I'm gonna take it down here. But let me now go live on my Discord. I'll see you guys that side. That's the ATM model. Forget about what I just said here. But it's another model at 830, especially if you have news at 830. The manipulation comes early, then this usually happens after during the opening. Cheers. See you guys that side. Hope this is very I hope you find this I hope this was very insightful, and I hope it helps you, fulfill your dreams. From me to you, peace out.